Hello and welcome to the Wells of Wall Street. I'm Steve.
And I am Simon.
And today we're going to be talking about our exit strategies. It's been a long-awaited video. We've debated it. We've gone over it with each other.
We've had arguments.
We have had arguments. But we felt we should let you know, as we're coming into a really hot period of this bull cycle where things in the next couple of months are set to go parabolic, how we're going to maximize the gains that we've made. Remember, none of this is financial advice. It's up to you to decide what you want to do with your crypto portfolio, but this is just what we think we're going to do when the time comes. You don't want to be in your head with your Lambo or Aston Martin money, or for your boat, Simon, and then watch all of those gains deplete over the coming months through to a bear winter. So the kind of point of an exit strategy, is to maximize your gains from your investment made while still retaining some exposure to those key assets that you've bought into through the last year or two or 5 years, however long you've been in it. Now, the reason for this is because previous history has shown that these assets do depreciate massively in a relatively short space of time. Altcoins, for example, can drop anywhere between 80 and 99% from their all-time high values. Bitcoin a little less. That one's normally about 70 to 80% based on previous figures. For example, we can have a look that between December 2017 and December 2018, Bitcoin dropped from around about £19,000 at its all-time high there to just dollars, $19,000 to around about $4,000. That is a huge loss if you were sat with all of those gains in your wallet and you just let it slide because you didn't exit at the right time.
That's right. I think one of those key aspects, as you just mentioned, Steve, so that's just on the screen, as you can see what we're talking about here. I'll just move the chart around a bit more so you can actually see the thing, would be helpful. So what you've got here essentially is where with Bitcoin in the past, move that out of the way. Oh, hang on, that's why. There we go. You can see that we were at quite a high point, as Steve said, around the 19,000 mark and the big drop. And that isn't an overnight thing. I think what happens historically is 2-3 month period of potentially up to 50% drop. And then the accumulation throughout that rest of the year, as Steve said, up to 80 to 90%, which is quite phenomenal, really. The only thing that I would say that's perhaps against that momentum at this point in time is, especially with the fundamentals of whether they will actually indeed drop to that low anyway, because we're in an adoption period here now, more awareness. You can see a lot of money being thrown out there for sponsorships, awareness campaigns, both crypto.com, exchanges, all of these kind of things. We've seen Digital Bits throwing $70 to $100 million into football sponsorships and things like this. So you've got all of that coming in the next few years as well. So it's going to be a really interesting time to see how the chart develops. But we can only really go on what we know historically. And that's why Steve is here with this awesome video today.
I think we can both agree that although there is massive adoption, we might not see the same levels of drops that we have previously, but people will still be selling, which only means that prices will come back down again.
Absolutely.
Now, what you might be thinking at the moment is, well, where do I sell at? How do I know what the all-time high is going to be? And I suppose really the message is, don't be too greedy. Don't try and wait for the very, very top, because you might miss it. There's probably a very good chance you will miss it. So what we both believe in is selling in particular orders, having key selling points and selling in increments. When you hit certain targets where you feel that you've made the gains that you want. Remember, this is all personal. If you've bought, for example, into a certain project really early doors at a cheap price, and you've made 2, 3, 4,000% gains on that project, you'll be quite happy to sell at a price compared to someone who maybe bought a month or two ago where they're only going to maybe 2, 3, 4x that particular project. For an example, Simon, you bought into Cardano around about the 12-cent mark. I bought into it around about the 22 cent mark. So I know they're still relatively close together, but we might be looking at a point to sell a portion of it at maybe $5, $6. But if you're just buying into Cardano now at the $2.83 mark and you sell at $5, you're only doubling your money essentially.
Absolutely. I think the incremental stages are really important, and that's something we've put into the charts quite recently in terms of buying opportunities as well as where we think the selling opportunities are as well. But I think it's important to have 3 or 4 key structured elements, both in short-term and long-term aspects, to ensure you don't get stung, as Steve said, because what you don't want to do is miss out on those opportunities. And no one knows where the top is. If you're looking at it from a selling perspective, no one knows the top. It could happen tomorrow, it could happen next month. No one actually fully knows. So you've got to think about it in that way. If you go back to the point about Cardano, for example, 12 cents, I haven't sold any Cardano because I believe in the long term. It's not one, personally, I want to be messing about with. I'm happy for it to be staking and leave it alone. But some people want to sell it, and that's absolutely fine. It's all down to your own strategy and what you think about it. But if you are selling, you just need to think about, like you said, maybe 15 to 20% sell off initially when you've had the 15 to 20% growth, selling off your initial investment at least, because then beyond that point, 100% profit, and then put your other stages in.
Exactly. This is all it. It's all about gains over investment. So for me personally, I would look to sell around about 20 to 30% of my holdings in a particular asset when that 20 to 30% equals my initial investment of the asset. So what I'm left, whether that's 70 or 80% from what I originally bought into or have bought into over time, will just be pure profit that I'm then essentially playing with. It's then up to me to decide when I want to sell or when I want to hold, but I'm not risking any of my own capital that I put into it originally. A good way to set those prices in so that you don't have to keep checking all the time is actually just create sell orders on the particular exchange that you're using, whether that be Binance, Coinbase, KuCoin, whatever it may be. Put in a sell order at those prices, because then it's autonomous. You don't have to worry about it. You've set it, and okay, if it does exceed maybe what you want to do, you can change it. You can go back in, delete that sell order, and then put a new one in.
Absolutely.
One other thing to remember is not to have an emotional attachment to your project. You just heard Simon say that he's not going to risk any of his Cardano. Maybe Simon has a slight emotional attachment to it. I don't know.
I sleep with my Cardano.
He does. He's very protective over it. Me, on the other hand, I am going to hold quite a healthy portion of what I've invested in, but I also want to maximize a large chunk of the profit that I've made in a short space of time, so I will be selling some of that off. Don't hold an emotional attachment. It is just numbers and data at the end of the day. I'm also, as well as Simon probably will do as well, is sell 100% of some of these projects. Now, some of them that we've got into have been speculative. It's been, let's see what happens with this one. It might just be for the short term. It's something that you'll just want to realize short-term gains on, get rid of it. And what Simon and I both believe in is focusing on the fundamentals going forward. So ones that you truly believe in, that have mass adoption, that can essentially change the global financial atmosphere that we're in. And those are ones that we believe you should still hold on to, maybe not 100% of holding on to them, but certainly a good portion of holding on to those.
Yeah, I think there's some out there. Cardano XRP, for example, for me, I value them so much, not emotionally, but I value them because of what they are and what they will be, that I just don't want to risk it, because trading is a risk at the end of the day, up or down. In terms of time frames and everything, it's just no one knows. And for me, maybe it's a confidence thing in the trading aspect of just leave those two alone in my portfolio. Basically, the rest of them I don't have any attachment to as such or anything like that. It's just a number to me. How much did I buy it for? How much do I want to make profit of? And if I believe in that project, in the fundamental side of things, I will be more than happy to throw that money back in there when the bear markets occur. This is exactly what you kind of just said a minute ago.
And that's what we're going to come on to now, is you're at the point, right? You've made your investments over the last however many months or years. We're in the peak bull cycle, whether that be kind of October, November, December-ish time this year, and you're sat with all of these gains.
Yeah.
You're looking at your portfolio on CoinMarketCap going, I am rich. Whether that be, and rich is in a relative term, it might be a few thousand, it might be tens of thousands, you might be lucky enough and have millions in there, who knows. But what you don't want to do is ride that wave all the way back to where you started or near enough. So what do you do with those gains, Simon? First off, my opinion, take out your initial investment. We've said it, when an asset gets to 20-30% of what you initially invested in, remove it. It's all profit after that. So once you've got the amount of gains that you're happy with, take out your initial investment in those stages. You haven't got to worry.
Can't go wrong.
You are not risking any of your own capital. Remember, in the UK, I don't know what American law is, but we're in the UK, you get something called a capital gains tax-free allowance every year. It's something like 12,300 GBP. So you can take that out of it. At the moment, unless you turn crypto into fiat, I believe in the UK, you can't be taxed on it.
Yeah, we do have actually a crypto tax expert hopefully lined up in the next couple of weeks to go through all of that. There's a lot of ins and outs to go through when it comes to taxing crypto and tax in general, of course. But
yeah, it's a bit murky, but you're still able to take out those capital gains profits as well. If you're in the UK, just over £12,000, and then you can have that as well as a bit of added money on the side. What I'm personally going to do, and I believe Simon will probably do as well with quite a few of his, is move a chunk into stable coins. Now, stable coins, if you're not familiar, are ones that don't really fluctuate in value. A dollar is a dollar, and whether that be USDT, USDC, what are other ones, Simon?
DAI, I think is another one, and there's a couple of others as well that you can BUSD, those
exactly,
kind of things.
Binance. So anything like that, a stable coin that doesn't fluctuate in value. What I'm going to do is move a healthy portion of gains into a stable coin on particular exchanges and wait for the drops to occur.
Yeah.
Wait for another accumulation phase. See through into that bear winter, and then again, dollar cost average your way in.
Yeah, don't rush the process.
Don't rush. Yeah. Don't buy after a month of it dropping, because it will inevitably get lower. And you want to still have some over the course of time. Dollar cost averaging in and out is the best policy in my opinion, because you can't lose. You're only, when you're investing, when you're going in, you're only investing what you can afford to lose. And when you're coming out, you're doing it in incremental stages, so you don't go all out at once, or you're left riding the wave all the way down to the bottom.
And one of the key goals from that as well is you're trying not to use your own cash, that you work hard for. The idea is you, as many people say, is let the money do the work for you in that aspect. So we'll go on to a couple of the other elements of how you can accumulate through the bear market without touching it. But more importantly as well, getting those incremental stages is important, because then you're not having to throw all your hard-earned cash into this. I mean, of course, you can still at the same time. You essentially double up, which is a fantastic idea to do as well. But for those out there that are trying to do it without having to touch their own capital, obviously that's an even greater goal to achieve.
Exactly. So a portion of those gains back into stable coins, and then reaccumulate the ones that you want to focus on. For us, it's fundamentals, it's Cardano, it's XRP. My mind has gone blank, Simon. What are other ones? XDC is another one that we class as fundamental. Ones like that back in through the bear market. And then another option, as Simon just said, is making it work for you. How can you gain more crypto with doing nothing? A great way of doing that is staking.
Absolutely. Yeah, staking is a phenomenal opportunity. I take advantage personally, as does Steve as well, whether it be through exchange or native wallets, which is what I predominantly do, just to basically enhance the systems that you're investing in. Staking is basically a reward system for you guys that validators use to improve their blockchain technology, their hash rates, all of these great things that are rolled in the ecosystem, and you get rewarded for them. So you could literally do nothing in some of these, and because the price points are so high, the APY is so high, you can literally obtain things essentially for free. And again, we'll get that covered in the crypto thing, but there are some elements that you don't actually get taxed on, things like mining and staking at this point in time. So again, a grey area, but we can look into that in more detail as we go along. But yeah, some of these platforms offer such great opportunity and reward throughout that time. So you've got three essential opportunities of downing the chart yourself by reinvesting, putting your own capital in, and staking those rewards. So there's incredible opportunities for that. And on that point as well, I know Steve will discuss in a second about exchanges going down, but one of the key aspects to think about when it comes to staking, if we look at this IOTX chart here, for example, me personally, I had mine in a Binance one, I think for 60 days. And it was all tricking along at 2 cents, and all of a sudden out of nowhere an absolute parabolic run up to 12 cents. And I've got quite a big stash of ITX, so I believe in the project massively. I'm not too concerned because I know it's a long-term thing for me, but I was stuck in the principle that my not necessarily the fact that I'll miss out on rewards. It was the fact that I had to wait a day and a half, 2 days for it to come out of the system. Now, obviously, at this point in time with ITX, there's still an opportunity for the drop and everything to keep going down, and we've covered that in a previous video. But it's that principle of, imagine the big bull run that we're about to enter, and you're at the top, and you everything's staked and this, that, and the other, or in earnings. Just triple check before you put anything in to these kind of areas, what the system is to take it back out again, how long it might be. These are really things you need to think about pretty much now, because in the next few months it'll be absolutely critical for those growth plans.
100%. Those are that is one of the issues that we'll come on to in a second. One last bit about what to do with the money is reinvest it in other opportunities. Simon did highlight make the money work for you. We talked about staking, albeit make sure you do it at the right time. But you don't necessarily just want all your money either in your bank, in cash, or in crypto. There are other ways to make money work for you. The percentage reward, the yield might not be as high, but you have things like stocks and shares, bonds, you have property. There's a lot of things that you can get into. It's obviously all relative compared to the amount that you've made, but there are other opportunities to look at that are potentially less risky, that will see your money grow over the next 3 to 4 years before the next bull cycle starts again.
And I think even for me as well, I've known in my head I want to attribute some of that collateral that I hopefully attain in the next few months to invest in some startups, whether it be friends or people or businesses that I know of, from small ones to medium-sized ones, to actually help them develop their business with investment and potential return on that, believing in that project just as much as we believe in the ones we're invested in this space as well. So loads of different ideas and opportunities that you can utilize your funds that you hopefully get along the way in this next run.
100%. So we've got the plan. You've made your gains, you've divvied it up, you've decided when you're selling, you've got everything in order. What could possibly go wrong? Well, quite a few things can go wrong, Simon, as we previously discussed with the staking. That's one of them, the staking timeframes, knowing how long you've got left, how long the redemption period is to get those crypto assets out of the staking pool, because it could be too late if you don't time it right. Another one is also moving an asset between wallets. This can cause an issue because if you get the address wrong, you could lose everything, which quite a few people, thankfully not us, have done. It can also cost a lot. If we look at the gas fees for Ethereum, trying to switch Ethereum between networks or between wallets at the moment, I mean, I was looking at moving from one exchange to another, and it was going to cost something like $30 or $40 to move my ETH over. It could be worth it, but it might not be. It's all relative to how much you're moving and how desperate you are to have it on a certain place at a certain time. But do bear in mind that it will cost something to move.
Even out of the exchange to your bank and everything like that, there's always a fee. And check them out and accumulate that ideology in your calculations of growth and everything as well.
And a big one, maybe the most important one, Simon, is exchange crashes. Now, this market has been so hyped. It's becoming mainstream news. Cryptocurrency is in the public eye now. So what happens when everyone and their dog wants to sell Bitcoin at the very top, or any other coin for that reason, or asset at the very top? Exchanges can't handle it. They can't handle the volume, so they go down. Don't be trapped with waiting till the very top when everyone's trying to do it, and then the exchange you use crashes and you can't sell.
Exactly. And with that point as well is the network of the actual crypto asset that you're invested in as well. As much as many of them hold many transactions per second, the amount of volume that is in crypto today and will be in a couple of months' time as well, you don't want to mess that opportunity up. You think of how many people will use Ethereum and Cardano, how many people of that network transferring that from exchanges, from wallets, wherever it may be. It's not just the exchange that can go down, the networks themselves can go down just because of the capacity they simply can't hold.
Exactly. So we hope that's maybe cleared a few things up for you if you're wondering, what do I do when I come into these last few months of the bull run? Remember, none of this is financial advice. This is just our opinion. It's completely up to you to do your own research and decide for yourself when you're going to buy in or sell out of any crypto asset. Make sure to hit that subscribe button if you haven't already. Also smash the like button. Let us know if you've got your own exit strategy in the comments below too. Make sure to follow us across all social media platforms including TikTok, Twitter and Instagram. We'll be out with another video very soon and we'll see you on the moon.
Thanks guys.